Hi everyone, welcome back to BeRich. I hope you had a wonderful Saturday evening and you're having a wonderful Sunday as we're getting ready into the first week of November in terms of investing. Halloween is over for those of you who celebrated it. Boo. And I know that's a bit late. But if you followed me on Instagram, you would have seen my news on Halloween and investment on the last day for investing for us there in India. But that's it. Thanksgiving is almost coming. And after Thanksgiving, of course, we get into Christmas. And then we would have reached the end of the year and we'll be into 2026. But that said, there's still a lot more investing left in this year for us. And that is what I wanted to focus on this video. As we get into the first week of November, where should you be keeping your eyes on and what you should be doing? Okay, last video we spoke about Meta and the bond insurance and all that. So there is a lot of debt that's being tapped by these companies. And these are just to cover the data hubs center costs. Because each data center is expensive not only in terms of chip, and like I said, in terms of land acquisition, in terms of resource acquisition, these costs can be massive. What initially started as a self-funded expansion by a cash-rich tech firm has been turned into a borrowing binge because capital need for AI is just soaring. It's going exponential, right? That is why we did a video where we spoke about how each company is lending to the other company. There's circular finance going on, right? That is also another sign of, a warning sign. Not all circular finance turns into, danger, but most of them have in the past been danger because of the simple reason. It's like trying to do juggling in a fast-moving, high-speed situation. Imagine you're falling through the air at a high velocity and at the same time you're trying to juggle with your hands. It's like that because all it takes is one contagion or a rumor of a contagion to creep into the system. Once that rumor creeps in, then it becomes very hard to control the collapse. And that is how fragile it is. Like I spoke about thin ice. When you go skating on thin ice, what happens? So this is what the issue is. And if you look at the Magnificent Seven, which is Amazon, Meta, Microsoft, Alphabet, all of them, together they spent $112 billion in the capex, on AI capex, just in the last quarter alone, mainly focusing on chips and data center buildouts. $112 billion is a vast sum of money. When it was finished with Jamaica's entire bill for reconstruction is only half of that. It's $50 billion. Imagine a country which is being devastated by a hurricane. The losses the country has suffered in terms of infrastructure is less than half of what these AI companies, these tech companies have spent in the last quarter. So there is no way I can tell you the volume of money we're talking about here unless you spend some time calculating this out. Amazon alone has spent $34.2 billion in quarter 3, boosting its total investment capex to 89.9 to date. So if we take first, second, third quarter, almost $90 billion, and I've added 3.8 gigawatts of computing power. That's a massive ramp up in physical AI capability. To offset all these costs, Amazon has been cutting jobs. Now, does it make sense why Amazon is cutting jobs? A lot of you are thinking AI is replacing jobs. This is where you're wrong. You're thinking that there's a job a guy was doing, now it's been automated, so that is why he's being sacked. No. It is that this AI is sucking up so much, vacuuming up so much of resources within these companies. They are looking at cost cutting. And that is another dangerous sign when we are reaching these kinds of bubble states in economies. That means we are placing all the bets on one single game, on one single table. So imagine you're in a casino and you have multiple slot machines and you have tables and you have cards, right? Imagine all the bets in that casino slowly moving to one table and one game. And that is what's happening. It's coalescing. So all other ones are being shut down. So Amazon is trying to save money and resources, not, to improve profitability. It is doing that so it can do some more funding into this capex of $90 billion it's done till date so far. So the wider white collar retrenchment across corporate America is towards this AI bubble. More and more money is being required for this competing between these tech companies, each one racing the other one, trying to reach, I don't know what. Of course, Zuckerberg claims it's super intelligence. It just looks like super madness right now. And the bubble dangers are rising. Analysts are seeing, right, early signs of AI mania in both in equity and credit markets. Capital is flooding in anything related to AI linked firms. Valuations have become detached from any near term earnings and herd exposure across indexes. So, this is what happens in a mania. Of course, like Bill Gates said, this is not a tulip mania. In tulip mania, it's just tulips. End of the day, everyone woke up saying, hey man, it's just tulips. Here, there is some actual, there's more like the internet bubble, like he said. There is some actual technology which is going to be useful for humanity in the long run. But there, in any new technology transition, there is kind of a situation where we can't control ourselves because of the way the nature is of capital markets, where we have this constant fear of losing out, so we chase. But we do not know. If you are lucky enough to get on board in the initial stages, you are in great shape. I understand that. But if you're in a situation like most of us who don't know about this AI and we've been very cautious about AI, the FOMO can be unpalatable right now. You could be finding it very hard not to think of investing in AI. That's why even Anand said, as a value investor, how to take a poll. He gave it a spin and said, think of something called Google, think of a Microsoft. They have a wide product portfolio. That's why I said avoid Meta when it corrected recently, because Meta is not a Google, Meta is not a Microsoft. So even safe sections in the European industries and emerging markets are being indirectly tied to AI through chips and data center demand. That means you could be a guy manufacturing, roof scaffolding, but most of your orders are towards data centers being set up. So you don't even realize how, your complete business, sudden uptick in orders you're having, sudden product demand you're having for wires. There's an American company which manufactures cables, LAN cables, which are being used in data centers, because you see these huge data centers. Everyone noticed these cables are red cables and blue cables. Then they Googled and said, okay, there's one company manufacturing these cables, which these guys are buying. So suddenly that company's stock price went up because it's linked to AI. So this is what's happening. And if AI trade unwinds, these index tracking funds which we have could spread losses broadly, since AI now underpins much of the global equity rally. The global equity rally is being fueled by this AI. Everything rises and they fall together is what everyone's wanting. And everything rises and everything will fall together at the same time. That's how a pancake lands. And any sharp AI correction could ripple through bond, equity, and even the job market. So I don't know where this is going, but I would say be cautious as an investor. You don't want to be caught in the middle of a maelstrom like this. And this explains why gold is also booming the way it is booming, because people are getting more risk averse and they're getting worried. And meanwhile, you have companies like Amazon, UPS, Target cutting 31,800 white collar jobs have been in a single week. And all of it is saying AI, automation, tariffs, slower spending drive. Okay. And this is the same thing the Fed is sitting and trying to figure out. So keep this in mind. We are in some really strange times, not only in terms of valuations, market and everything, all that we've been talking about, but in just terms of globally speaking, what is happening. And there is a shift happening. There's a subtle power shift happening from the West to the East. The influence China has and the way it's wielding and flexing its influence. Trump may be coming out and saying a lot of things, but the Chinese are not saying any of that. That says a lot. If you're coming out and claiming something, that you made a new friend, that friend should also be very enthusiastically saying, yes, we are friends. And that does not really happen. You're finding more silence from China, which I would say you should pay more attention to. Anyway, I hope you had a wonderful week and a wonderful weekend, and try and get Anand in hopefully next video, if we get some time. Otherwise, it probably might be me again till we get to London. Thanks for being with me on BeRich today. I hope you had a wonderful weekend. I would love to hear what your thoughts and feedback is on what I said. you share any of this, or your views very different. I'll try and do something more stock specific tomorrow when I talk to you guys. Thank you for being with BeRich me today.